80% of the Oklahoma wheat crop is in the ground. And Kim, what is on the plate for Oklahoma producers as they move forward?
Well, I think the first thing is what the prices are. You can look at the current price, somewhere between $3.90 and $4. A harvest out in 2020, you can forward contract somewhere between $4.20 and $4.25. Relatively low prices. I think what they need to be concentrating on is producing a high quality product to sell as we get into June and July of 2020.
What's really changed since harvest back in June?
Well, if we go back in late June, our prices were up around $4.40. They peaked in mid-July at $4.50. Oh, in mid-September, they'd fallen down to $3.50, $3.60, and now you've got them up at $3.95 to $3.40. So they've really been wallowing around from about $3.60 to $4.40, mostly in that $4 range.
So when you have a question like this, you go straight to somebody with a PhD. Kim, why are wheat prices so low?
Well, if you look at what's going on with wheat prices, one, I think it's a relatively poor quality of the hard red winter wheat. Now, it did average 11.4% protein. You can compare that to 12.4 last year. An overall average when the good years are around 12.5 is what you need in the export market. But I think the main reason that our prices are at current levels, that's where we have to be to compete in the export market. What France has been selling the soft red winter wheat out, the coast coming out of the Black Seas, to compete with them in those markets, we've got to have prices right now at less than $4 a bushel.
Why are we seeing that 90-cent difference between hard and soft wheat?
Well, that's the big question that a lot of people have been asking. I think it's a market situation. You look at ending stocks. In 2011 to 13, hard red winter wheat ending stocks averaged about 300 million bushels. Stocks to use ratio 33%. You look at the last 4 years, including 19, we've averaged 524 million bushels of ending stocks, 66% stocks to use ratio. And for 19, we're projected 491 million bushels ending stocks and a 57%. Now, soft red winter wheat, which is normally at a discount to hard red winter wheat, but this last week was at 99.5 cents above it. In 2015-16, they had 2010 million bushels ending stocks, 67% stocks to use ratio. This year, 110 million bushels, significantly lower, and a 38% stocks to use ratio. So 57% hard wheat, 38% soft red winter wheat. Which one's going to have the highest price? Supply and demand, soft red winter wheat is. I think it's a market issue.
Going back to the global market, where are we with the world wheat crop actually being harvested?
Well, if you look, the northern hemisphere is essentially done, a little bit being done up in Canada and some parts of the USSR, 3 or 4% left to do there. In the southern hemisphere, you got Argentina and Australia, the important crops. Australia continues to lower their production because of drought, drier weather in Argentina. The market hadn't got a good handle on it yet, but a couple of weeks ago we were talking about a record crop in Argentina. Now it's going to be less than a record, and that is part of the reason we've seen a 45 to 50 cent price increase over the last month or so.
Is there any hope for higher prices here in Oklahoma?
Oh, I think so, and especially as we get out to that next crop. If you look at the protein premiums in Kansas City right now, ordinary wheat, which is less than 11 to 12.6 wheat, you've got a 90 cent to $1 premium there. If you're looking at, say, 12.2 to 12.6, you're looking at an 80 cent premium. In other words, if we can have 12.5, 12.6 protein next harvest, you can that protein premium is going to be there because the protein is not going to come in the market between now and harvest. And so the way to get that higher price is to have that protein. You take $4.20 plus 80 cent protein, you got $5 wheat right there.
So that's easy to say if you're looking at all the numbers, but there's also input costs that go into that. What advice do you have for that Oklahoma wheat producer that's riding the margins on that wants that high protein, but also knows that there's going to be inputs to also make that higher price?
Well, what's coming out is research at OSU is timing that nitrogen applications. You don't have to put as much down you get a bigger bang for your buck. If you put it down at the right time, you can lower costs, less nitrogen, and better quality.
Okay, thank you very much, Dr. Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.